Welcome to Holistic Accountant Podcast, where we aim to showcase how adopting a holistic approach in accounting and tax maximizes value for clients. Beyond traditional tasks like preparing financial statements and tax returns, a holistic accountant focuses on offering advice that maximizes personal wealth on an after-tax basis. If you enjoy this episode, please consider leaving a rating and sharing it with those who might also benefit. And to ensure you stay updated, subscribe to our weekly email. The link is in the show notes. Okay, Mena and I would like to talk about today the red flags that might suggest that your advisor or accountant isn't the right person to be helping you at this stage of your business. And I say this stage of your business is because as a business grows, sometimes a business can outgrow their existing advisors. It could be also that you chose the wrong advisor from the get-go and, when your business was at a very young stage, it wasn't an issue because you didn't need a lot of additional value from your accountant or your advisor, and maybe your business has grown to this level. The point is, I think we need to really think carefully about this. And the thing that we've said many times in this podcast is that professional advice pays for itself. And Mena and I, eat our own cooking. When it comes to getting some legal advice or, some business structuring advice or some succession advice or these sorts of things, we certainly do lean on external experts, not only for ourselves, but for our clients. And time again, we see that, that there's certainly a cost associated with that, but the value you receive is quite significant. So choosing the right advisor is incredibly important, and listening to the red flags and looking for the red flags is important too. So what we hope to do or achieve in this episode is just communicate, what are some of those signs, and then if you're open to them, then you're open to potentially seeing them. Hopefully then it'll give you some early warning signs of, when you might have outgrown your existing advisor. Okay, Mena, so let's start with, what do you think is the number one red flag?
The one that I hear the most is that the accountant is reactive and not proactive. So, I often hear that, I only hear my accountant from my accountant once a year or around BAS time, and that's just to report the BAS or tax return or something like that. So, from my perspective, a great accountant should help you plan, not just report. But I always preface this by saying that it's a two-way relationship. Now, you need to keep your accountant and advisors appraised of what is going on in your business or your personal lives, or what you're trying to achieve and what your goals are. Otherwise, they can't advise, they can't help. They don't know what you don't let them know. But even if you do let them know, and then you're not sort of getting the right advice or the right sort of support, then I think you have a problem. They should be talking to you about how are you forecasting, what's your cash flow like, what are your growth strategies. We always say if you're not growing, you're dying. So what are you doing differently in your business to help you grow, and what are you trying to achieve from a personal perspective? It could be things around risk. Is there anything different in your industry? Is there any updates and so forth? So if you're constantly chasing them for advice, then you're probably already behind.
Okay, so got it, Mena. You can't have a conversation by yourself. So if all the communication is one way, that's going to be a bit of a warning sign. Okay, got that. But what else is there, Mena?
I often find that a lot of accountants, especially, it could be a lot of older accountants, they can lack the understanding of your business or your industry. So if your accountant doesn't get what you do, your industry, your goals, or your challenges, their advice can be really generic. So it could be just things around, just appeasing tax law and so forth, but they won't be talking about any nuance about your business or industry, anything that might be relevant to you, such as R&D grants or anything that's happening in current legislation that might affect you as a business or in a particular industry. So you want someone that almost speaks your language and tailors their guidance, not some sort of blanket template advice. So another big red flag is around technology. A lot of accountants avoid technology. So if they're still relying on sort of outdated sort of paper systems and so forth, or you're on an outdated sort of CRM or bookkeeping software, then you're really missing out on what that value can really bring in terms of real-time data and automation that could save you time and money.
So, Mena, I know you say fees can sometimes be a red flag, particularly around transparency of fees. Maybe you can explain to listeners what you mean by that.
Only recently, I've actually had a client who operated a medical clinic, a pretty straightforward medical clinic that was being exorbitantly charged by their accountant. I'm talking almost six figures annually. And mind you, they had bookkeepers in place that they were paying separately and so forth. So I really was lacking the understanding as to why they were charging so much. And I think that the client themselves, of course, were asking themselves that exact same question. So if you don't fully understand why and how you're being charged, then I think that's a really, really big flag because there's lacks transparency. So if your accountant's not transparent with you and not providing you with the right advice and they're sugarcoating things and leaving you in the dark, then it's a sign that they're protecting themselves and they've got no interest for you or your business.
So, one of my mentors, Mena, has always said that a poor man can't teach another poor man how to become rich. Only a rich man can teach a poor man how to become rich. And it sounds a bit crude, but of course, it makes a lot of sense, right? Are you ever going to take financial advice from, someone that's living out of the boot of their car, for instance? Probably lacks that integrity. And trust and integrity, I think, are a key part of any advisory relationship. And at the end of the day, an accountant should be, providing, hopefully, if you need it, value adding advice. So it's not just about producing returns and financials. And so, should you take value adding advice from someone that actually can't run their own business well? So, Manny, you talk about this all the time about, trust and integrity within a relationship, particularly an accounting relationship. Maybe you can unpack that for us.
Yeah, and I think trust is the foundation, and it's not just about honesty; it's about reliability. So if you're finding your accountant that's constantly missing deadlines and lodgements and so forth, then things aren't going right. So if your accountant can't even run their own business, how are they going to advise you on your business? And I find that sometimes a lot of accountants can get defensive about questions, and sometimes, and mind you, mistakes can happen. And if they're not taking ownership for those mistakes, then that's another big red flag. You should never feel like you're bothering your advisor, questioning what they're doing, because they should really be transparent with you and there should be a level of integrity and trust in the relationship.
So the challenge, Mina, is that, there's going to be some clients or listeners, people listening to this saying, well, how do I know if I should be getting value adding advice from my accountant? I mean, it's quite possible that their accountant believes that they don't need or want it, so, it's difficult to give advice to someone that's not interested in listening to that advice. So I think that part of that is, it's got to come from the client. And the flip side is maybe there's nothing that they can improve. Maybe everything's going fantastically well, or maybe it's a really simple business and there's not a lot of moving parts. So how do you respond to that, man? How do I know if I'm the person that's in business and you're my accountant? How do I know if I should be asking you for that value added advice?
I think the first step is to actually have that conversation. When someone approaches me and says that their accountant isn't very proactive, they're very reactive, my first question is always, have you actually tried to reach out and have you had that discussion with them? Because sometimes, as Stuart mentioned, sometimes there's nothing to be done. It's just sort of business as usual till a certain sort of metric or achievement is achieved so that you can actually start to begin advising on something else other than just compliance matters. But I think it's really important to have that conversation from the onset. Don't lose trust from the get-go because there's a lot of noise out there about, oh, have you thought about this tax strategy? And, you could be, buying 30 properties by 30 and all these kind of things and negatively gear and depreciate and all these kind of things. I've heard it all the time, but sometimes it's not very relevant. And a lot of the time, unfortunately, it's not really relevant. So it's really important that you start that conversation with your accountant. And then if you're still not satisfied with the response and you feel like they're getting defensive and not providing the right advice, then that's when I think that you should start sort of engaging someone else and having that discussion with someone else.
It's so true, Mina, isn't it? You can certainly underthink things, which is what we're talking about today, but you can certainly overthink it too and overcomplicate it unnecessarily. So, but then again, I think maybe that's the role of us as advisors sometimes to pull that back and, cool the jets sometimes for with some clients if they're going in the wrong direction. Anyway, so if some of this stuff kind of resonates with listeners, some of these red flags they've seen in their existing accounting or advisor relationship, what can you do about it, Mina?
Again, I'll come back to have that conversation first. I really think that you shouldn't really be jumping ship if you're not fully informed. Then after having that conversation, if things aren't improving, then start exploring your options. Ask other business owners for referrals. Look online, meet a few firms, and look who for people who ask your questions about your business, not just your balance sheet. So advisors who are not just looking at just P&L and balance sheet items, but things that people that are actually genuinely interested in your business. And when you do switch, do it cleanly. Get all your records, your systems, your passwords properly transferred. A good accountant would make the transition seamless. Unfortunately, sometimes I got to preface this that sometimes the outgoing accountant can be very much a hindrance. So try to get as much information as upfront as possible.
One of the challenges with assessing advisory relationship, whether it's accountant, financial planner, insurance advisor, mortgage broker, whatever it is you don't always know what good looks like. So let's finish today on a bit of a positive note, Mena. What does good look like when it comes to that sort of accounting business advisory relationship?
I think it comes down to that communication piece. Are they proactive? Do they contact you before you need them? And sometimes, like I said before, on multiple occasions, sometimes there's work that doesn't need to be done. So they're not reaching out to you. And sometimes they've tried to reach out to you on multiple occasions and there hasn't been sort of a reciprocated effort. So I think that it's important to also look at what the accountant's doing from a firm perspective. Are they providing you updates regularly? Are they putting information out there for you to understand and to listen to or read? Do they understand your industry? Have they got other clients in that same industry that they can help you benchmark across? Do they explain complex things in simple terms? And I think this is one of the biggest things in the accounting industry is that accountants love to overly complicate things so that they can charge big fees and so that you don't ask any any follow-up questions. So it's really important that you understand and are across certain things in your business. And I'm not saying that you need to understand every sort of nuance in a tax legislation, but you should understand the things that are most relevant to you and how they affect you. Are they using tech and tools and systems and processes to allow you to get real-time visibility of your business? And are they celebrating your wins and help you navigate any certain challenges? I think it's really important that your accountant is not just a compliance accountant. A good accountant is one that provides you with value and can hone in on certain metrics or anything in your business or personal affairs that can create value for you in the long term.
So hopefully that gives you, a few warning signs that you can use not only now, but hopefully in the future as well to work out if you've outgrown your existing advisor. One thing that Mina and I talk about a lot and wholeheartedly believe is that our job is to help our clients achieve their business and personal goals. That's it. Now, the goal is to lodge their tax return on a timely basis and meet the compliance obligations, but I bet that's not a goal in the top 20. They've probably got a whole bunch of other stuff that they want to achieve. And we can't help with all of them, but there's going to be some outside of just preparing financial statements and tax returns that we definitely can help with. And it's about working together with the client to discover which of those aspects we can help with and then providing that advice and insight. Referral sometimes it could be because it could be outside of our business, but whatever it is, it's really just about helping our clients achieve their lifestyle and business goals. And I think that's really the goal of any advisor, whether it's an accountant, a financial planner, mortgage broker, whatever it is, very much the mentality that we adopt in our firm. Okay, until next week, bye for now.